Hello and welcome to the final chapter in the Banker's Masterclass series on reducing the risk of correspondent bank de-risking in association with Banking Circle. I'm Joy Macknight, editor of The Banker, and with me is Mitch Trehan, who's UK Head of Compliance and Money Laundering Reporting Officer at Banking Circle. Thanks again, Mitch.
Thanks, Joy. Good to be back.
So, Mitch, what do these banks and non-bank financial institutions need in order to get away from the challenges presented by the current correspondent banking solutions?
So to get away with the current problems of being de-risked, what options do firms really have? Option one, which is what we're seeing, have multiple banking providers. But as we're also learning, that increase your cost base. The other option is they can avoid high-risk customers, but then that leads to financial exclusion. The other thing they can do is slow down with their innovation and the changes they're trying to make and helping other firms that are really innovating. The reason you slow down innovation and think of that is because that tends to present unknown risks. And banks at the top of the chain quite often are wary of unknown risks. But again, slowing down innovation and slowing down businesses, that's going to really deter things from improving that could be really valuable to the economy. None of this can be the right answer, in my opinion. There is a solution that needs to be found to overcome these. We can't keep increasing costs. We can't keep having financial inclusion problems. And we urgently do need a new approach for the world at large.
So then, how does Banking Circle, for example, help in providing this new approach? And then also, what kind of new emerging technologies are coming into play?
So Banking Circle is different for a number of reasons. We're building the world's first super-correspondent banking network. And not only are we building the first super-correspondent banking network, well, we're one of the only banks doing this. If you look traditionally at many of the banks that have been in this space, they haven't been investing in the technology for what other banks and financial institutions need. And that's where Banking Circle is different. We're a technology-led bank, and our client base is only banks and financial institutions, non-bank financial institutions, payment firms, other institutions that need access to payment systems. And we're developing and enhancing that technology because that's where we want to support the global economy. Where other banks still have that internal understanding of, will we be de-risking this industry? Should we invest in technology? Should we support it? We've already made that decision and have really started developing all the technology in that. And that's where we are uniquely different. We're ahead on the technology stack. We can give other banks and financial institutions access to local clearing and local payments. And even the smallest bank and non-bank FIs can get access in a competitive way because we've reduced the cost using technology. And then that means people can have low-cost payments for their underlying customers. Banking Circle is a fully licensed bank, and we're using technology, and we're really moving forward to meet the needs of the global correspondent banking network needs. Through a single API, other financial institutions, payment firms, banks of any size can get access to our technology stack and deliver these payments to their underlying customers effectively and very efficiently.
So thanks again for all your interesting insights, Mitch.
Thanks, Joy. It's been lovely speaking with you.
So this concludes the Banker's Masterclass series in association with Banking Circle on reducing the risk of correspondent bank de-risking. Thank you so much for watching.